Well, stock futures, as we've been talking about, we have been seeing a drop here. Many are predicting there will be a downbeat earnings season. On deck this week, PepsiCo, Delta, JPMorgan, Morgan Stanley. Thursday, as you can see, is a busy week in particular, so we're going to get more details on how all these companies are doing. We're also going to get new economic reads for the month of June. Probably the most important reports of the week are going to be June CPI. That's coming to us on Wednesday. Forecast for an 8.8% headline gain. PPI for a 0.8% month-over-month gain, and retail sales coming on Friday, which is a bit unusual there. Retail sales forecast to gain 0.8%. I should also mention the other report I'm really going to be watching on Friday, guys, is the preliminary University of Michigan conference report. Now, remember, of course, it was the last CPI report that really spurred the Fed to get more aggressive with its rate increases. But I feel like that was cemented by the dismal University of Michigan consumer confidence report, which really showed not just that people are paying higher prices, but really showed the effect that those higher prices are having on sentiment. So for me, that's the most current report. That's the sentiment report. I'm going to be watching that one really closely.
I know we're in the midst of travel season, and of course, going into the holidays, it's going to be interesting to see, and back to school season, I should say, rather. It's going to be interesting to see where these airline earnings come in at. Delta is one big one that's on the radar. You mentioned that one. And particularly what they have to say around where they're navigating the pilot shortages, number one, the number of routes. If they do anything, as we've seen, all airlines have to think about the number of routes, the capacity that they're running those routes on, and the amount of workers that they have to support that. This has largely led to most of them, if they have had to report a type of earnings miss, yet seeing higher revenue, it's because of a lot of the input costs, so the operational expenses being far exceeding some of their own expectations over these past 2 quarters, we could even say. And so with the current quarter in mind, and then even the forecast, it's going to be really interesting to see what they have to say in terms of their own guidance going forward from here, too.
Now, lots of focus on the first week of earnings, of course, for the banks. I get it, understandable. They're likely to show pressure in the trading division, investment banks. But for my money, I think that earnings report from PepsiCo tomorrow morning is very important. 3 months ago, PepsiCo came out, really reported an un-PepsiCo-like quarter. Disappointment on sales, disappointment on margins. And I think tomorrow you could see potentially another report like that. High levels of inflation, maybe a little more pressure on the sales line as consumers balk to some of these higher prices for snacks and drinks. And if they come out, PepsiCo comes out and cuts that full year outlook, that could be indicative of what a lot of other consumer companies and frankly, a lot of industrial companies might be getting ready to report in the next few weeks.
Yeah, and just to zoom out, we've been talking specifically about Pepsi and the banks and the airlines. Just to zoom out for a second, according to FactSet, we're looking at a 4.3% gain in earnings 2Q over a year earlier. And that's the slowest pace that we have seen since the fourth quarter of 2020. And as we've been talking about, there's a lot of views out there that is still too high, that as you suggest, Saz, we're going to see a lot of companies coming in here and downgrading what they see for the remainder of the year. So we'll see what effect that has, if that is potentially already priced into a lot of these stocks. Of course, we saw a wave of re-rating. Well, we've been seeing re-rating all year, but then we saw another wave of re-rating after Target came out with its forecast and then forecast again. So, how much more can be priced into these markets, I think, is really going to be a key question here.
And do they put out downward revisions in their earnings going forward? Or do they pull guidance in entirety, citing unfavorable market conditions or uncertainty in the broader kind of consumer sentiment or the market for their particular product or service? And so that's something that we could be back in the throes of those.
Yeah, shades of 2020, right? Yeah. Unpredictability, Saz.
Exactly.